Welcome back to a truncated edition of the Daily Drum on WHUR and Sirius XM, channel 141. I'm Harold Fisher. This is April the 15th, tax deadline day. As always, there are those of you who have waited until the last day, the last minute, to file your taxes. Well, tonight, we'll tell you what you need to know as you finish up the process or decide to file an extension. My guest is Theodore Prelo, Teddy the Taxman. Hey, Teddy, how are you?
Absolutely. I am doing absolutely great, honestly.
Well, I'm not going to keep you because I know this is probably the busiest day of the year for you. It's, for you, this is like Santa Claus on Christmas Day. So, or Christmas Eve.
I don't know if I would quite describe it like that, but okay.
The whole sleigh and reindeer thing. So, first and foremost, why do people wait until the last day to file their taxes?
Wait a minute. You said we only got 15 minutes, Harold. I can't go through all those reasons in 15 minutes.
That many, yeah.
And some are legit, but most are not.
Okay. Well, give me just a handful based on your experience.
Some people just have an absolute fear of tax preparation. They fear the end result. They fear that it's not going to be a refund. They fear that it's going to be way too much money to pay to the Internal Revenue Service and the various states all at the same time. And much of it has to do with them really not knowing and not understanding, where all they have to do is reach out to a tax professional, get the explanation, and then act accordingly.
Can waiting until the last day get you in trouble?
It absolutely can get you in trouble, because if I'm preparing your tax return at the last minute, I may say, hey, you know what? I just thought of something that may help you. Do you have the receipt or whatever the case may be? And then it's no, but I can get it for you. Well, how long is it going to take for you to get it for me? And that could lead into other issues and things like that. So that's a good question. Yeah. Mm-hmm.
So what kind of trouble could it get you into?
Late payment penalties. All right. So we always tell people to file for an extension. Yes, filing for extension, if you have to do it, yes. But I want folks to remember that there are at least two potential penalties. One is failure to file the tax return. The other is failure to pay the balance. So there's always two. So if you can't pay, at the very, very least, if you're not prepared, at least file the extension, which gives you the an additional amount of time to actually file the paperwork.
So explain that process, the filing of an extension. Is that just for federal, first of all? Can you do it for your state taxes as well?
Oh, good. Yeah, I recommend, if you are going to file an extension for both your federal and your state. Now, obviously, Harold, we have listeners in Florida, we have listeners in Nevada, and places like that, Texas, that don't have a state income tax. Okay. So those states are not, I'm going to say the obvious, you are not required to file a state extension for those states.
Mm-hmm. So how do you file an extension for your federal income taxes?
Yeah, the form is a 4868. What you should do is, to the best of your ability, send in that extension and write on it, this is what I expect to owe. And not the verbiage, but there are lines that will say, hey, how much do you expect to owe? You just write the amount on that line so that the IRS can know what to expect. And let me say this, if you have some of what you can send into the Internal Revenue Service, send it, because the more you send, the lower your penalty is going to be assessed on. And that's bad English, but you get what I'm saying.
Yeah. Oh, so if you owe let's say you owe $1,500, it's not that an IRS agent is going to say, if you send 500 of the 15, oh, that's nice. They're not going to. It's not about that. It's just about lowering the penalty on said $1,500.
It is about lowering the potential that you are going to get assessed to your tax bill. That's what it's about, Harold.
So what's new this year? I understand that there are, for example, new tax brackets. Is that a good thing, a bad thing? What's going on there?
I don't focus as much on the tax brackets as the items, the potential deductible items and things like that. I want our listeners to remember that, unfortunately, we can only deduct, for those states in which income taxes are paid, we can only deduct up to $10,000 in state income taxes and real estate taxes. Now, Maryland and New Jersey, New York, California, our tax rates are high. They're very, very high. Mm-hmm. So for those states, for individuals in those states, it's tough because it's easy to have $10,000 withheld in state taxes just from your W-2. So you won't even, and under those circumstances, you won't even get to deduct your real estate taxes or state taxes that you paid from a bill last year. That's a tough one. That's a very, very tough one if you live in a high income tax state. Now, DC, you're kind of all right. But if you live in the higher income tax states, that's a tough one to swallow. It really is.
So if today you just don't file your taxes, mm-hmm. and even if let's say you expect to get money back, but you've not done it, what harm is it doing it tomorrow?
Really no harm, with the exception of your tax refund might be delayed. So let me explain that. We always talk about those folk who have a balance due or potentially have a balance due. You should file an extension. But I'm glad you asked that question, because for those people who are anticipating a refund, you can file tomorrow or Wednesday or next week. No skin off the IRS's back. They just get a chance to hold your refund a little bit longer. That's all.
Mm-hmm. But if you owe and you don't file for an extension and send your taxes tomorrow or Wednesday or next week,
yep,
what happens then? Is that more problematic?
Yeah, not problematic per se, but the IRS just assesses you with that penalty, that late paying penalty or the late filing penalty. Well, in this case, you asked about the late paying penalty. And sometimes penalties aren't fun, Harold. I don't know about you, but to me and most of my clients and most of the people I know in general, penalties are not fun. Because guess what? If you pay a penalty, you can't even deduct that on your tax return next year. Did you know that?
I didn't know that. No.
Yeah. That's a tough one.
Yeah. So when you're on this final day, when you don't have an extra month to kind of brainstorm, are there any kind of last minute things that people can do to save money before they file?
Make sure. See, I don't recommend people preparing their own tax returns because your tax professional, who's probably been doing this for years, maybe decades, has all of that knowledge. You can use tax software and things like that, but it just does not give you that interview feeling. And so when you're sitting down in front of a tax advisor, we're saying, okay, how about this? How about this? How about this? What about this? And here's a special circumstance. What about this? And it really does, trust me, it really does help. Whereas tax software, all of the tax software is good. Let me say that. All of the tax software is good. It's just that, some are better than others. And I'm never going to say any tax software is better than your experienced tax professional.
So, what should, and for those who do decide to prepare their own, what should they not forget today?
Okay. What they should not forget is that if that return is not in by 11:59 p.m. and they owe, then they could get assessed that late filing penalty and possibly that late paying penalty. They should know that. Make sure that you have all your deductions all lined up, charitable contributions, mortgage interest, property taxes. Make sure you have all of that lined up. And a hint might be to look at the previous year's tax return. I know me as a tax advisor, when I take deductions on the client's return, I label them. You can do it generically, and you can put $500 worth of, let's just say $500 worth of charitable contributions. But I found it to be very, very helpful to say $500 in charitable contributions to ABC Church, $600 to the Red Cross, and on and on and on. Harold, that helps a tremendous amount, because think about it. If you practice philanthropy, and maybe that's a little bigger than I wanted to say it, but let's say this. If you have that heart for giving, you might give to 6, 7, 8 different entities. How are you going to remember that when it comes down to filing your tax return? Hey, maybe you don't have to remember it. Maybe you can go back to last year's tax return and you can see those various recipients of your monies listed on your tax return. That's a good way that way you don't have to remember this. That's a good way to follow up with, to whom you gave, et cetera, et cetera, et cetera.
What are the biggest mistakes that you believe people make when it comes to filing their taxes?
One is self-preparation. Another is waiting too late. Another is, this is a big one, Harold. Well, I got a refund last year and I got a refund the year before that, so I should be all right this year. Harold, you and I both know that things change. Tax laws change from year to year. And so if you're depending on, well, I got a refund last year, that could get you in big trouble. And I know some of our listeners can identify with this. I've been getting a tax refund for 3 years straight. But remember what happened with the Tax Cuts and Jobs Act? People were getting refunds 2 years, 3 years. When the Tax Cuts and Jobs Act was implemented, things changed. So now they weren't getting a $1,500 refund. They were owing $600, $700. Now you waited until the day after the tax deadline. You owe the $600 plus whatever the penalty is going to be assessed to your situation. Waiting until the last minute is not good.
Now, here's a really important question. Post-pandemic, a lot of people have switched to working from home on a full-time basis. Jobs have allowed them to do that.
Oh.
And so what does that mean for their taxes? For example, in 2023, somebody was working from home the entire year when perhaps prior to that and prior to the pandemic, they always went into the office. Does that make a difference?
In most cases, it does not. Let me make a suggestion for all those folk to whom this pertains. Let me make a suggestion. Why don't you talk to your employer about a reimbursable plan? It's called an accountable plan. Because you see, even when, as an employee, even when I was able to deduct items on my tax return, the expenses that I incurred for work, I still never got 100% of it back. Whereas if I am working from home and my employer is saying, no, you have to work from home, I can talk to my employer and say, well, based on my calculation, I spent $600 to work from home this month. Mm-hmm. Can we set up, it's called an accountable plan. If you can't remember that phrase, a reimbursable plan. That's not the official name, but that'll help you to understand, help your boss to understand. So boss, can we do an accountable plan? Whereas I would incur these expenses, I'll show you what those expenses were for the month, and you can reimburse me. Guess what, Harold? So look, now you, the employee, are not out anything, not even $1. And guess what else? The employer can deduct that on his or her own tax return.
Teddy, I'm out of time, but real quick, give me a couple of websites where people can go if they need help.
Okay. You can reach out to the IRS, irs.gov. If you are a Marylander, it's marylandtaxes.gov. Maryland is spelled out. You can also reach out to me. I'm at huntvalleyretirements.com. But I will tell you, I'm going to be just a little bit busy this evening.
There you go. Teddy, the tax man, thank you so much for talking to us. I appreciate it. We'll be in touch.
Harold, always a pleasure.
That is the Daily Drum for this Monday, April 15th, Tax Day. I'm Harold Fisher. Good night.